Here we go. Good morning. Good morning. Good morning, everyone. Happy Monday. Oh, man, hope everyone had a great weekend. Hope you were smart with your health. I hope you were smart with your money. Coming at you like we said we were. We said that we were going to be doing lives on a weekly basis. And I got my good buddy, Jonathan Fodera, with Integrated Business Financing on this morning again. And we're going to talk about some hot topics right now because there's a lot going on in the world. There's a lot going on in the States. And I think there's a lot of uncertainty right now. And we're just going to talk about some basic common sense things that people can be doing. And I'm going to ask Jonathan. Jonathan's got years in the business. First off, good morning, brother. How are you?
I'm great. How about yourself, bud?
Good. Uh, I know that we were going to be doing these on Friday, but we both committed to coming in Monday strong to give people some, just some basic understanding on kind of what's going on in the market. Like I know personally, we make investments. We have investments in the stock market, bonds, all kinds of stuff, and it's just, what do you do, right? We've never been in this situation. I've personally never been in this situation before on the investment side. And I know we're going to talk about it. Now, those of you that don't know, Jonathan has a company called Integrated Business Financing, and his specialty is helping people with business financing, as well as coming up with some cash when you need it. Like, he is the guy that could just kind of make it happen. So, Jonathan, I'm just going to get right into it, brother. Crazy times right now, right? We're going
Yeah.
to war. They're saying markets changing.
So,
Give just a little insight on what you think is going
yeah,
on.
I'm gonna try to steer away from the politics
Right.
as much as possible.
Of
I would
course.
say turn off the news because it's all agenda based. Okay, our government has completely failed us. Our leadership has failed us. So we kind of have to take everything into our own hands, right? And just from a financial perspective, let's go over what that looks like. From a business owner standpoint, if you own a business right now and you don't have a line of credit, you should get one today. We can help you with that. This isn't a sales pitch. You should have it. The other thing is, right now, the last year to 2 years, we've been able to borrow money at exceedingly low rates. Okay. And you should be using that money, getting as much as you can to invest in growth in your business. Here's why. Over the next I think over the next, let's say, 6 to 24 months, interest rates are going to climb very, very high. Okay. As interest rates climb and you borrow at lower rates, all right, it kind of smooths everything out and helps you fight against the biggest thing that I see that is going to be a challenge over the next, call it, 2 to 3 years, which is inflation. Okay. As inflation keeps rising, your purchasing power, the value of your dollar goes lower and lower and lower. All right. So as a business owner, you need to make sure that you are increasing your revenues well above the whatever inflation is. And how do you do that? You borrow money at super cheap rates and use it to invest in the business. That's the business owner
So
perspective.
real quick, let me touch base on that, Jonathan, because a lot of people think right now inflation is at like 6 or 7%. Again,
It's not.
it's not. It's
It's
much
bullshit.
higher.
Let's think about this. A year ago, gas was about $2 a gallon. All right,
Hmm.
now it's $4 a gallon. That's 100% increase. If you go to the supermarket, what would have cost you, $200 or $300 a week to feed a family of four is now double that. Okay, so whatever, they're not reporting accurate information, and I can tell you that you need to be aware of this and you need to protect yourself. That's why I said turn off what you see on the news. Okay, it's agenda based, and they can manipulate certain numbers to make it appear less than what it is.
Yeah.
So it's all about coming up with the strategies that you need to protect yourself. As a
Yeah.
business owner, I just laid it out. From a personal perspective, what can you do? Well, owning hard assets, okay, like real estate, like a house, like investment properties, especially multifamily investment properties, is a very strong play because as inflation goes up, the value of your house is going to go up. You've been seeing that for the last 2 years. All
Hmm.
right. Now the market could correct, but owning a house has never been a bad play as long as, like, if it's an investment, you have someone that is paying that mortgage, right? Basically, they're paying down your mortgage, and hopefully you're netting some on top and help increase your personal cash flow. Now, what other things can you do to fight inflation? Gold, silver, obviously oil. You guys have seen oil. Price of a barrel has gone way, way up. A lot of that is because of everything that's going on geopolitically. However, oil will continue to climb in this type of environment. I'm not going to get into trading. That's a little too complex for this. And I'm certainly not telling you to go buy barrels of oil and keep them in your house, because that's not going to help anybody. But you can invest in precious metals. You can invest in digital currencies. I think they're going to go up substantially over the next, call it, 6 months, and that kind of acts as a hedge. Those are the things that you should be doing. The other thing is just having good personal financial habits, right? So if you are making, let's say, $1,000 a week, what is that thousand? How is that getting allocated, right? If you know out of that 1,000, let's say 400 has to go to hard costs or your living expenses, right? That's part of your mortgage, part of your rent, insurance, your car loan. Well, what's going on with the other $600, right? Are you going out and blowing that on a Friday night, getting hammered at the bar, or is 200 going into savings, 200 going into digital assets, and 200 going into the stock market or some other investment? All right, and I think having strong financial habits like that, and that also applies to business owners, having those things in place will help you get through the ups and downs of what we're seeing here.
Mhm. And that's an important part. I want to touch base on that because, obviously, our market right now, we're fixing a lot of people's personal credit. So we teach them about, good financial habits. And this is an important part. Like on the business end, makes perfect sense to the people who have money, people who know what to do with money. Obviously, what you just said was probably some of the best advice for at least like my target audience. So like my target audience is people who have been hit financially, they whether lost a job, couldn't pay their bills, they have some personal crap on their credit, right?
Mm-hmm.
And no judgment, they just got into a bad situation. But I think that's where it starts is, I see it happen. And listen, you and I are both in a lot of the same social settings and entrepreneur groups. And we see it all the time. We see people starting to make a lot of money. Then all of a sudden they're showing the bling and they're showing the car and they're showing the trip and the look at me and, whose pocketbook is bigger than others. I got to say that for the first time in my life, this is the first time I really have good financial habits, like putting it into things, getting our money to make money. And it feels good. So I feel I could speak on this because a lot of people don't have those good habits.
Yep, I agree.
Don't have those good habits.
So,
What are some, if you mentioned a couple different things there, like digital currency, stocks, real estate. I want to get into that real estate part for a second
mhm.
because a lot of people right now, they feel, and I'm not talking about the investment portion, right? Because obviously real estate's always going to be a good investment. But let's say for the people who are renting a home, right? I mean, they're renting a house or they're renting an apartment and they're just like, oh man, buying a house is so, I'm not ready for that. How important is that first piece of the puzzle?
It's actually everything, and so here's some really good advice I gave to somebody that is on one of my teams and they haven't done it yet. If you are renting, okay, especially in the Tampa area, as the prices have shot up exponentially, same thing across the country. You have to be willing to take a step back to take 3 or 4 forward. And a good way to do that is if you are renting currently, I would go find a duplex, okay, or a triplex. And yes, you might go from, living on your own in a 2 bedroom, 1 bath apartment to living on your own living with 2 other neighbors, but they're really your tenants in a 2 bedroom, 1 bath triplex or duplex. But guess what? They're going to cover the mortgage and maybe then some. And you're basically living there for free, okay, having an investment paid off. All right. I don't understand why more people do not operate that way. Yes, do you want to obviously have a house all to yourself? I'm sure you do. But if you're looking at this and saying, well, I don't think I can afford a house by myself, well, this is the way to do it. The other thing that I want everyone to be aware of, real estate is always a great long-term play, but as these rates go up, it becomes less and less affordable to actually take on a mortgage for a house. And with how high the prices have already fallen, you're going to see that start to stabilize and maybe even come down a little bit. Okay. So I would try to get in if you find the right situation as soon as possible. A big part of that is having the right credit to do it, though. So you have to have, strong personal credit. Otherwise, you could end up paying a hell of a lot more for that mortgage than you need to.
Such a good point. And right now, money's pretty cheap, right? What's the
On,
average mortgage?
on historical levels, I just spoke to somebody Friday. He said rates have gone from like high twos to like low fours overnight.
Oh, wow.
Like over the last, call it, 2 months.
And do you see that getting better?
No, I think it's just going to keep moving up.
Right.
I think it's going to keep going up.
Yeah.
Just because of inflation and what the Fed says now, geopolitically, things could change based on everything that's going on. But I can't forecast it, right? I can give you the playbook, I can give you the steps. At the end of the day, if you guys are actually taking action on it, and instead of renting, moving forward and buying a house, especially a duplex or a triplex, I don't think you lose in that situation, right? Because let's say this: you go buy that triplex or duplex, and it costs you $300,000. All right, you put, the 10,000 down plus probably another 20 to close. You're in it for 30,000, but you eliminate the rent that you were paying. You find 2 tenants, you rent those 2 units out, and then you're living there for free. Now, let's just say the rates keep climbing. Well, you locked in a low rate already, all right? Or historically, what would be considered a low rate. And now, all of a sudden, the prices are going down and down and down of houses because the rates are going up, like we just explained. Well, guess what? It doesn't matter. You know why? You're living for free, and they're paying your mortgage, and you might be netting some income. So, do you really care if the price of that triplex you just bought for 300 goes to 250? Not really. You don't care because it's a long-term investment. And guess what? As this is going on, you could be saving more money, okay, for your dream house, and the price of that's coming down. And then when you move out of that triplex and hop into that dream house, guess what? Now you have 3 rents coming out of the triplex, okay, and that's helping you cover some of the mortgage on your dream home. All right.
Right.
So most people do not think like that. Most people are not doing what they need to do. And it is okay to take a step back, develop these habits, so you could take 3, 4, 5 steps forward, regardless of, what's going on in the economy.
Yeah. Great stuff today. Let me just give a quick recap, everyone. So number one, first, everyone, it's about your habits. It's about your financial habits. First rule, spend less than you make. And I think that's probably one of the biggest problems in America right now.
Well, as a country.
As a country, right?
We don't have a tax problem. We have a spending problem.
We have a spending problem, right? Stop spending more than you make. That's number one. Number two, get your house in order. Get your financial house in order. Make sure that you're cleaning up your credit. Make sure that you have the ability to leverage your credit. I think this is a huge part because people don't understand the power. And this was our first live that we did, the power of leveraging your credit. So get your credit cleaned up. And then contact people like Jonathan, contact people like myself. If you don't have the answers, seek new information, look for help. Jonathan, how long have you've had in the finance world? How many years?
Too long. 14.
20 years?
No, 14.
14? 14 years.
My background, my family's background, my whole family was on Wall Street. I bucked the trend.
You went on your own.
I did.
I love it. That's great. Guys, we're going to be coming at you. We're going to be coming back out to you on Friday. Again, we're going to be doing another one. This was the makeup from last week. So stay tuned. Jonathan, where can people get a hold of you? Easiest
Jonathan,
way.
yep, Jonathan Fodera is good on Instagram and it's good on Facebook. And then my website, www.integratedbusinessfinancing.com. And guys, do us a favor. We're coming and doing this. We're delivering a ton of value. Please share this. Please tag people that need to see this, right? The more eyeballs we get on this, the better our society is going to become because they're going to have basic understanding. And the more we are independent, the less we can be controlled. You got that? So the more financial independence we have, the less we can be controlled. That's huge.
Say it one more time, brother.
The
One more,
more,
like I want that one to hit home. That's gonna be the mic drop for today. Say it again.
the more financial independence we have, the less we can be controlled. The less we need anything from anybody, including the weak ass leadership that we have.
That's right. Personal accountability to take care of your own house, get your house in order. I've been preaching that one for almost 18 months now. Jonathan, thank you, brother. We're going to see you. Obviously, you guys know where to get a hold of me, Brad Modrich, on all of the platforms. If anybody does have any questions in regards to their credit, I got the website up top for a free consultation, www.trifectacreditsolutions.com. Jonathan, I appreciate you, brother, as always. Thank you so much. And we'll talk to you at the end of the week. Take care.
Awesome.